Hello, I'm Gary.
And I'm Ginger.
Today, Ginger and I are here to talk about the possible negatives of a reverse mortgage. There are basically two negatives regarding a reverse mortgage. First, there's less money left for the kids after you die. And the second is the cost. It can be higher than a regular mortgage. So let's cover any possible negatives. Less left for the kids. You are taking some of the equity that's in your house to improve the quality of your own life today. That causes less to be left for the kids after you die. Now, for some people, hey, that's not a big deal, but for others, it is a big deal. But keep in mind that as the house appreciates in the future, the kids should get some or all of that future appreciation. Now, I know what you're thinking. My house is not appreciating, but in all likelihood, in the future, it will. The general consensus among economists that know quite a bit more than I do is that there's no way we can avoid inflation in the future given the amount of money that our government has borrowed over the past few years.
Gary, I didn't know anyone knew more than you did.
Well, unfortunately, there are a lot of people that know way more than I do. But that's what most economists say. And the kids should get some or all of that future appreciation. But to summarize, if you do a reverse mortgage, while there still should be some equity left for the kids when you die, there just won't be as much.
If I may, I'd like to mention one more thing. Our company has done over 8,000 reverse mortgages. And in working with our customers, I think you'll find this interesting. Some customers don't care that there's not a free and clear house left for the kids. Their attitude is they've put their kids through school already. And oftentimes, they've helped them every time they've had a bump in the road, even when they've been grown.
Then we have another group of customers that, while they regret not leaving more for the kids, they also face up to reality. The only way they can stay independent and not become a burden on the kids is to take out a reverse mortgage. They feel that taking care of themselves is taking care of their kids.
Yes. Well, let's move on to the other negative of a reverse mortgage, the cost. The average total closing costs that are added to the loan typically run $9,000 to $13,000. It's $9,000 for a house worth about $150,000 and $13,000 for a home $250,000. The total cost on a reverse mortgage is more expensive than a regular mortgage, but here's why. You have to buy an insurance policy from FHA that you don't buy with a regular mortgage. On a $150,000 house, that insurance policy costs $3,000. It does great things for you. First, it allows you to not have monthly payments. Secondly, it ensures that when you pass away, your home will be worth what's owed against it. And if it isn't, the insurance policy kicks in and pays the difference. That is a good thing because it protects your heirs.
So in evaluating the costs, in the end you have to decide this. Is the cost of the reverse mortgage, which is typically paid by your heirs, worth the cash you were getting today?
I hope this helps you understand any negatives associated with a reverse mortgage. And thank you for watching. We're here to answer all of your questions at any time. Remember, life is a blessing.